Good morning, everybody. Welcome to the Flow Show. It's a Thanksgiving special today. Well, I don't know if there's going to be anything special about it, but it's Thanksgiving anyway. Morning, Kay. How you doing, mate?
Hey, good morning, Ryan. Happy Thanksgiving to all our friends from across the pond. As you say, Thanksgiving special without having to say anything special.
Yeah. Yeah, not much special going on this morning, I can tell you. But we've had a few moves after the PMIs, which we'll get into shortly. We'll kick off with what's going on in China. They fixed their rates at 7.1212, so keeping it in the 712 still. Had a little bit of a wobble in that dollar rally yesterday. It's back down near the lows again today, which is obviously good for my book, but from price-wise perspective, it just shows that we're not quite ready to bounce just yet in this one, as is the case in a few dollar pairs as well. Might as well crack into some of the data as well that we've got coming on. As mentioned, PMI day today, so Australia opening up with, well, poor numbers, one can say, still further into contraction, 47.7 in manufacturing, 46.3 in services. So not looking too good there. Coming into the Eurozone and some of the Eurozone numbers as well. Some improvements, but it's all just not as rubbish as it was last month. France services taking a little bit of a jump on last month. It rose by a pip, but not as much as expected. Excuse me. Manufacturing going a little bit softer. Was expected to rise to 43.1, but came in less than last month. Germany, that saw some green numbers there, beating expectations and rising on last month as well, but still well within contraction territory, but at least moving the right way. That's a start. The pan-Eurozone numbers doing pretty similar as well. UK managed to see services moving into expansion at, if I remember the number, there we go, 50.5 versus 49.5 expected, and as was the prior. So a small move into expansion for the biggest sector in the UK. That's the important one. But manufacturing as well, ticking up nicely, still below the 50 number, but again, going in the right direction. And the pound saw a bit of action over that number, more so than the rest of the Eurozone numbers on that. But we shall look at prices shortly. Over to central bank speak, mainly just the ECB bods out and about today. ECB de Guindos says it's premature to discuss interest rate cuts, and the market's hopes of a soft landing may be a bit optimistic. So maybe a little bit of truth coming from de Guindos there about what's going to happen with the economy over the months ahead. Bundesbank and ECB bod Nagel says German growth will be flattish this year and a little better next year. That's largely going alongside their latest monthly report. Says believes we are close to a level seen as a terminal rate, which might be a little bit of an unhawkish admission from one of the bigger hawks at the ECB. He said he can't say if the ECB will raise rates again, but thinks the rates will stay where they are for a while. Over to the UK, so we had all this autumn statement stuff. We knew what was going to happen pretty much beforehand, and most of it did happen. Various tax cuts and uplifts in minimum wages and benefits and that sort of thing. Perhaps the biggest news to take from all of this, the quid was fairly supported on all the measures that were dropped, seen in a positive light in terms of business for investment, paving the way for better investment and firms and stuff. That was part A. Part B, and especially this morning, is that we are now seeing a lot of chatter about an early election, maybe in the springtime, May time, next year. There's no declaration yet as to when the election may be. It has to be done by the end of January 2025, but more likely it'll come in 2024, at least before December. So maybe around November time is when it was largely expected. But one of the changes, the tax changes to national insurance, kicks in January, which is a bit unusual because any changes to these sort of things usually come in the new fiscal year starting in April. So the fact that the Chancellor's brought this forward to start in January, when everyone will get a little bit of a tax cut, has got tongues wagging that it is a precursor for an earlier election. Now, of course, the leading party will only talk about an election or prompt an election when they feel they're in a strong position. And there's a long way to go before they feel like that. But that's the chatter anyway. Everyone's talking about the hints from this statement as to whether it means an early election. We shall wait and see. We've probably got to get a good bit of polling under the belt for the Conservatives, the leading Conservatives, to see where they are in the polls and whether they're closing the gap on the opposition party. So we may not get a clear idea until the early part of next year. Which is saying a summer election to ensure a turnout of the older generation. I've got a feeling whenever it is, this turnout is going to be pretty low. I'm sensing a lot of voter apathy at the moment. And I still expect the leading party, the Conservatives, to get a good spanking. It just depends on whether they get an absolute spanking or just a bit of a slap around the chops. But we shall see. We shall see. Something for the new year. And on the UK, Citi have waved their magic wand on the rate expectations for the BOE. They see the first BOE cut coming in August next year, but they see 100 basis points of cuts in 2024. So pretty much a cut every month in the latter part of the year. But their early fishing bait is going out for August. The game we're going to be playing is with all those expectations come a bit closer in. So maybe towards more the middle of the year or early part of the year. We shall see. Over to BOC's Macklem, and he's pretty much claiming the end of inflation and at least potentially the end of rate hikes. He says that interest rates may now be restrictive enough and that the excess demand that made it too easy to raise prices before has now gone. But he reiterated that if high inflation persists, the bank is prepared to raise its policy rate further. Says the economy is approaching a balance, though we expect it to remain weak for the next few quarters, which means more downward pressure on inflation. On inflation, he says it's still too high and progress in cutting it is slower than we had hoped. And when it comes to monetary policy, we will be taking it one meeting at a time. Bit of a change from Macca's now. He sort of got a bit scared, didn't he, over the last couple of months? But now all's better, all's well now, Kay. And
yeah, it's really a matter of he's been gradually removing his hawkish stance, and now he's joining actually the camp of those who seem to be rather a little bit on the dovish side. Not that it impacted the Canada much, but it's all like market has relatively anticipated it, I guess. Canada was more moving on oil yesterday, up and down, than really what McClem was saying, right? Yeah, but it is a change of tone. Yeah, like as you say earlier, Nagel was a bit the same. Uber hawk for a long time, and now he's also saying that they may be close to the end. It's a bit of the part of the global repricing. Let's put it that way.
Yeah, and until we get another couple of higher inflation reports, and then they'll probably all turn hawkish again. I mean,
Yeah, exactly.
I think that's the nature of things right now. They really don't have a clue what's going on, and they're swinging with the punches, rolling with the punches, just the same as markets are. And
exactly. Exactly. I mean, they are at the level of the markets, and the markets have, let's face it, not much more of a clue. They are trying to now trade the end of the hikes, and yeah, even looking forward to cuts. By the way, this morning on the back of those higher PMIs in the UK, the rate swap market has priced out the expectation. Sorry, for the June or August rate cut in the UK by the BOE they pushed it out to September rather than the expectations for August. But again, as we have seen so many times, what happens one day may be completely undone and reversed the next day. That's the nature
Exactly.
of being data dependent. And interest rates markets, who usually are, well, we've been talking about that actually since the pandemic started. I said, like, this is going to be a bit of a naughty one. But even the rates markets, who normally are the anchor of the markets, the slowest movers, are now pricing, repricing, doing, undoing by the session. So that's the
Yeah.
nature of the beast right now.
They've got a wet finger in the air, the same as all the rest of us.
Exactly. Absolutely.
Right. Well, coming back to US data yesterday, we had the jobless claims numbers and durable goods. Jobless claims going back into a more positive light. The headline number coming in at 209k versus 228k expected. Those continued claims dropping back a bit as well. So we were having a few worries about the trend that we'd seen in this continued claims numbers. That's had a bit of a setback. We'll see if it's a one-off or if the trend reimposes itself next week. But for now, nothing to see here, and no worries over that. Durable goods looked a bit sucky, came in at minus 5.4%, much worse than the minus 3.1% expected. But there's probably some big swings in that. It can be a bit of a volatile number. Take out defence, that there was a big swinger there, down 6.7%. We obviously heard about all those airline deals being put in play over the last couple of weeks. They're probably not reflective in these numbers and may take some time to come through. But overall, not good looking numbers, but they were pretty good the month before. And you can tend to see swings in these numbers when you get a good month. Then the following month gives a bit back. It might have given them back a bit more than expected. We've got the final Michigan numbers, and all relatively there or thereabouts. A slight uptick in the final number, coming in at 61.3 versus 60.4 in the flash. Probably the big news is that 1 year inflation expectations went up a pip. As you can see there, the flash came in at 4.4, was expected to come in unchanged. It went up to 4.5%. The 5 year stayed as it was at 3.2%. So inflation expectations in the US still running a bit hotter than they have in the recent months, and that's something the Fed will keep an eye on. And that's actually something that's been prevalent in a lot of the PMIs this morning as well. That price pressures have started to gain again, or have not been falling as fast as expected. We've had various members, ECB members, prompting that inflation might go up in the latter part of the year, and that's maybe expected as well in other countries. So just a bit of reflection if we'd start to see higher inflation numbers coming in, and what central banks do to deal with that. Now, there's been a few other bits and bobs on the geopolitical front and other bits and pieces. The OPEC meeting that was scheduled for the 26th got booted to the 30th of November. That apparently was because of some African nations disagreeing on output assessments, among other things. That gave oil a little bit of a wobble yesterday, but it's recovered since. There's also been a US strike against Iranian-backed or led military whatnots But that happened in Iraq, and the US took a strike against that Iranian-backed military, whatever it is, escapade. But the Iraqi government aren't happy with it. They've come out and said that the strike took place without the knowledge of Iraqi authorities, and that's in violation of sovereignty. Probably not much. This was a headline that was out fairly early yesterday. I've not heard much on it since, but it's just another one of those headlines that plays into what's going on in the Middle East. If Iraq decides to kick up a stink, that might add further tensions to what's going on over there. So just one to keep an eye on. North Korea is up to its old tricks again. It's saying it's going to deploy stronger armed forces and military equipment at the border, and that South Korea will be responsible if there's an irrevocable clash that may occur there. So they've been up to no good again, so things are stepping up there as well. On the political front, as you may or may not have heard, there was the election in the Netherlands, and far-right leader Geert Wilders has actually won it. He was expected to do better than a lot of people thought, but he actually gained the most seats. So that's all kicking off over there. They've got to decide how that and if they can form government with a coalition, which parties are going to go with them. The main opposing party has given it a flat no because they're left-leaning. So they've got 25 seats. Wilders won 37 seats, I think, and you need 76 for a majority in the Dutch Parliament. So that's ongoing, but a bit of a sentiment change in the Netherlands. May not be entirely important for the euro right now, but if it's a mood of sentiment that's spreading across Europe, that may change the political complexion, and that might be something that euro traders will take note of. So that's what's going on over there. Okay, any gems for us on this Thanksgiving Day?
Yeah, this thing about what you just spoke about makes me think a bit about France, right? With Le Pen and she always being like very high in the results, but nobody wants to get on board with her. And yeah,
well, one could say that Italy went that way with Meloni.
Yeah, and it's something that we see more and more in Europe for various reasons. But yeah, whether it has an impact, it's that as you say, that Italian situation, the budget stuff. Does it weigh now? No. Does it create like some kind of a cloud overhanging what may happen to the euro? Yes, but then we can only trade it when the market will basically trade it, right? So it's one of those things which is very hard to trade unless you are a 5-year long trader and say like, okay, Europe will run into trouble, and then you do some long-term products also. But yeah, I mean, it's one of those things, right? What else? No, I haven't seen that much. There was an interesting article though yesterday, a bit of a kicking in an open door again as well, that the Bank of Japan did not have to buy any rates or RAITs, okay, which is a real estate equities and ETFs. And they spun it again in a way like this is a sign of normalization. But I would say that if the market goes up, there is no need for the Bank of Japan to push it even further, right? But it is noteworthy that they likely will go through 2023 without having to increase their rates and ETF holdings. So take it as one wish, but it may be part of in the upcoming Bank of Japan meeting, saying that, right, we judge that we don't need this system anymore now, and that will give like a little bit of a psychological boost perhaps to the yen for a short term. But it's something that we that we just have to keep in mind. If and when the Bank of Japan would change a little bit more to their statements or actions, it's all adding to the big pot. But again, it's kicking in an open door right now, because they don't need it when the markets go up, right? And that's really basically, there's a lot of like really minor headlines. For those following Swedish krona, the Swedish krona got a slap around its ears this morning, as the Riksbank. It was like a nearly 50-50 chance whether they held or hiked another 25 bps. They held, still keeping all doors open. We'll probably discuss in January whether they are going to sell more bonds. But in the meantime, they also acknowledge that inflation is coming down, so the market was like taking the glass half empty and decided to give the Swedish krona a slap around the ears. But we are still stabilizing at levels lower in the euro stocky than we may have seen before. So yeah, it's just one fact. And I know you are not necessarily watching it closely, but we do have the SARB, South African Reserve Bank, interest rate decision today. They're expected to hold their rates unchanged. We have seen the South African rand being quite weak of late, and we just reached those 1888, 1890 levels. Was a bit of a resistance I was watching. We just reached it there, and we shied away a little bit on the back of a lower dollar across the board. But that's likely going to be the bigger mover for the rest of the day, really, with the US being completely out. And that's it, really. I mean, the rest is really, if you want to pick details also, that's yeah, there is nothing really else in the headlines, right?
Yeah, thanks, mate. Yeah, the US is closed all day today. Bonds and stocks closed, so there's going to be nothing coming out of that side of things. So it's likely to be a very quiet day. Now we're through the data in Europe. Not much else to come out. So you've got to be careful in days like today, because yes, nothing should really happen, but with that lower liquidity, sometimes people can get up to shenanigans, or a headline gives something a bigger move than it would when everyone's sitting here watching it. So keep an eye on your price levels. If you do see anything funky, if it hits a level, if you're in a position and you suddenly find yourself on the right side of it, then don't look the gift horse in the mouth. Take some of that profit, because likely things will revert to type unless it's a really big game-changing headline or something. So starting with the euro, still banging between the lines. We had the little dip yesterday. That's picked up again today. Those improving PMIs doing a little bit of help, but there's still nothing much to write home about. So we're in this little range play going on here between my zone and the upper levels. We'll see if we get another look at 109.35.40 and see how that plays out. That was a prior level, so I'm expecting any upside moves to find a bit of traffic there. If we get above there, we'll see what we do in the highs after that, whether that's a move too far or not. Dollar yen, that's a bit yo-yo-y at the moment. We obviously had the bounce back up. Couldn't quite get up to have a look at the 150, which is what I've been waiting for. Then we had a decent dip under, back down to this old 148.80 area, which did nothing on the way down, not a lot on the way up, but all of a sudden it's now a level again. It's just one of these watch levels as opposed to something I trade, just where the price tends to do something. Okay, you probably got something sitting there, no doubt.
Yeah, of course. Yeah, that level now is where the and so that I don't need to show it again. That's where the top end of the daily cloud lies right now. Okay, 148.85, and we know that the Japanese are closely watching those things. So that level may show up. Okay. No, I think you. Nah. Do you have the? I'll show it then. Just leave it.
Yeah, I've got it.
Oh, there it is.
I've got
Do
it.
you have to go onto the daily then?
Yeah.
And that comes in around 148.85. Okay. That cloud right now.
There we go.
Yeah,
Right
that's
on the
where it
money.
is. Yeah, so that's a bit of a level. I guess today not anymore. Maybe interesting for the close of the week, right? Whether we are above or below, that may see a bit of interest on from the Japanese side once perhaps we open the week next week, because usually the day after Thanksgiving the markets tend to be a little illiquid as well. What do we have tomorrow? Oh, we do have the PMIs tomorrow in the US. Okay, so that may move the needle just a little bit. We do have the PMIs in Japan out as well.
Yeah,
Oh,
and CPI tomorrow as well from Japan.
CPI as well. Here we go. Oh, okay, so the yen could be a mover overnight, especially that after Thanksgiving day to day, the liquidity may not be fully there either, because there's a lot of people taking long
it's
weekends.
half day tomorrow in the US as well, so
Absolutely.
it's early closes tomorrow in the US. I don't know why they bother, but obviously after they've stuffed their faces with turkey, they need to come and trade stocks for a morning and then go off and have an extended weekend. So yeah, that's half day, full day close today, half day tomorrow afternoon in the US.
I have my personal Thanksgiving. No, not really, but tomorrow, so I won't be around either.
You got your turkey in the oven, have you, mate?
Nah, not really. But I can always stuff another bird or so, you know.
All right,
Move on. Move on.
Moving on very swiftly. Yeah, we're talking about the quid. Cables, as I said, back on the PMIs, had a nice little rally. Things looking a bit more bearish there. Taking out the prior highs, which is a bit of a signal to say that we're not done moving higher. If we'd have held those highs over the PMIs, then you'd think, right, well, that's a bit of a level to look at. But the fact that we have moved through keeps this momentum going. Not enough to get us up to the 50 fib just yet, but maybe we have a little bit of a creep up there, and then we'll see what the price wants to do up there. It's also coming in close to the 126 handle, which is going to have resistance in it naturally, of course. Support where it needs to be, 124.50. Our old mates down there, 124.50, coming in around that old 38.2 fib as well. So we've spoken about this 124.50 going back ages and ages and ages. A real bit of a magnet level previously, and there we go, support in right there yesterday morning, and giving the cable the ability to, as I say, take out that high. That's put euro sterling a little bit on the back foot again. We're still holding 86.90. This is the area of support you need to be looking at, this old 38.2 fib. So 85.90 is a level down below. Under there, then you might get one of these breaky moves underneath. But if it holds here, it just it keeps this consolidation going for one thing, but it keeps the overall trend still, which is this creepy uptrend, keeps it in play. But we will need to take out those highs at some point, or we might face a stiffer pullback on that. But again, lower liquidity, not much going on. These sort of the sort of levels that for now are holding on for this one. Kay, do you want to take it for a very quick whirl around?
Yeah, very quick one, mate. We are not going to hold people back too much today. Just perhaps worth mentioning, Ryan, about the big option strikes, which may, on an empty day like today, have a little bit of an impact on the market. I see just a couple, not too far from where we are. If you want to mention those.
Yeah, go, you take the charts, mate, and I'll bring them up on the platform, and then I'll show it on the screen.
All right, great. Because you know, when for our audience, when there's nothing else going on, if there are decent strikes, which the market may have been putting in place actually specifically on a day like today, because some of the option players may find it funny to move around the markets a little bit with their strikes. So they may have a little bit of an impact, right? So the first thing that I'm going to show you here today is this dollar rand, okay? Because the rand has really been very, very weak. Still a lot of problems around over there. Their interest rates are expected to be kept at 8.25%. The prime rate at 11.75%. But we have to look at the statement for the South African Reserve Bank, because as we know, most of the central banks are at the end of their cycle, really should be pushed a lot for hiking again. This being said, the South African inflation was a little bit higher this week than we had. It's a different situation than when you go, say, for instance, the ECB or the Fed or the Bank of England or so, seeing high inflation rates. They're going to raise rates. Although we saw a bit higher inflation prints and the currency also not keeping the levels. That's what's happening in in South Africa, because it's clearly very bad inflation over there when it overshoots, right, with all the problems that they have. So for those trading emerging markets, sorry, I know there's a couple, and I'm keeping a close eye on those emerging markets as well. Have a look at what's happening here. If ever we retest this 1887, 1890 zone on the dollar rand, or if in turn the South African Reserve Bank manages to curb this ZAR weakness a little bit, and perhaps have a move back down to those mid 18s, and why not on an empty day in those 18.25, 1830 zone. The thing is, me personally, opposite to what I usually do or think about Mexican peso, the rand is one that I still would like, if we get a really big setback, either sell rand and buy dollars, or which is the easiest part of it, or the most straightforward part of it, and or do perhaps rand versus something else with decent interest rates as well. So keep an eye on what's happening today, especially with the reduced liquidity. This could be one big mover. I'm just going to mention a couple, because we have seen really decent tests of a couple of dollar pairs. And for the time being, this looks yesterday like having been a day where ahead of Thanksgiving, some American needed to buy back dollars, because usually the claims should not really have pushed euro dollar 60 odd points lower, or cable a big figure lower, although cable was been in a counter reaction of front running the budget talks. But one of them is dollar Swiss, and we are on the 61.8, and we are, as people already showed in our room, possibly building an inverted head and shoulder. But in my opinion, this is starting to test this line a little bit too often. So I did try it a couple of times of this line. But yesterday I just let it go on a bit too early, but I just let it go, because I think the price action here is not really very ecstatic. I will see what happens perhaps next week on the back of it, and also the fact that we could not rally straight away back to 89. The figure is leaving me with a bit of a feeling that we may go for a little bit of a, call it a stop loss run perhaps, but which could drive us into the 87s. And we saw the same thing on the Aussie dollar yesterday. We had the setback. There is more going on. I have on dailies and stuff. There's more lines going on. 65, 20, 25 was always a level. Always. We've retested it yesterday afternoon, and it's holding once more. So this is, in my opinion, still quite constructive. We don't know exactly what's going to happen in the into the end of year. In the end of year, into the end of month flows. That's for next week. But in the meantime, this is holding. We still need to overcome this 85, 82, 85 zone, which is a 50%, depending on where you take it from. It's at 82, or if you take the other one at 85. But I like to take this is when the euro dollar as well printed its high back in July. The 50% lies around 82, 85, okay, in the Aussie dollar. So you have about a 60 pips range, but I found it quite interesting that we held here. Cable already mentioned by Ryan. It also held at 124.5, and we are already back to the prior highs. And another one that is starting to show signs that we may be in for a bit of a test here as well, is the dollar Canada finally giving up the 137, and we are in this zone that I was telling you about. I'd stretch it to 136.40 because it's the 78.6 of this move, and we do have other levels here as well around this 40 zone. But it's starting to look, it held today, yeah, but it's starting to look like we may be. Would it be for just a stop run, before the week is over? There may be a little bit of stuff happening there. So we are on levels in dollars where it is looking actually perhaps a little, shall I say, a little fragile. Of course, we know the euro is not yet there, 109.4060, as we've been talking about, and Ryan already showed as well. But it's all like the retracements in the dollars yesterday, higher dollars, have been countered, okay? And that's kind of the message that we may take away into this Thanksgiving couple of days, really. There's one that I'm keeping an eye on because I'm still, by the way, I'm a little long Aussie dollar, and I'm quite constructive the Aussie. We are just going up and down between 166, the figure, 166.5, the intermediate, and 167 on the euro Aussie. I'm tempted, if I see a rally back closer to 167, I may be a bit tempted here. If in turn we start to break below 166, we could have a quick look at what's happening at 165.30.40, where the support of this whole channel lies, okay? If we get down below there, then the run down to 164.5 could be rather fast. And you know what? I think this is okay for a day like today. What do you think?
Yeah, thank you very much, mate. Good stuff as always. I'll grab it back quickly just to show what we've got on the option front, as Kay mentioned, and you guys and girls in the chat room can get this on the ForexAnalytix dashboard, the option reports we put up every day. As you can see in here, quite a chunk between 109 and 109.20 in euro dollar, over 5 billion rolling there. So again, what you want to look for, it's a quiet day today. These options may keep the price glued. If you see any moves in other dollar pairs or other euro pairs that are looking a bit excessive and this one's not moving with them, for example, if cable suddenly comes off but euro dollar doesn't, and there's no real headlines behind it, another dollar yen's rallying or something like that, and this one's glued, then you look at that as maybe a bit of a catch up after the expiry, that these options may be keeping the price pinned there. So that's just something to look at later on today, 1500 UK time, 10 a.m. New York is when the expiry is. So yeah, a little bit there. Dollar yen as well, around a big figure, and where we are now, 149.20s, 30s, so a bit going off there as well. Just over 3 yards going off between the big figure and 149.20, 30 there as well. So yeah, just keep an eye on those. If you see a little bit of movement around the option expiries, might give us a little bit of an opportunity. And on that note, we shall leave it there, just as Turkey hikes 500 basis points.
Only 500?
Well, they expected only 250, so they went 500.
All right.
So, yeah, 40% is now their 1 week repo rate, 40%. And people over here moan about 5%. So be thankful you're not in Turkey, and all the best to anyone who is in Turkey coming out of that mess. Hopefully it resolves itself soon. So go and enjoy the rest of your day. If you have nothing you want to do in trading, then switch your PC off, go and do something else, go and hit the golf course, or go and do the last minute gardening, or whatever you guys and girls do to pass the time. We will be here tomorrow. There's no F.A.C.E later today, obviously, because those guys are taking a break, but we'll be back tomorrow. K-Man will be off, so it'll be me, myself, and I to keep you company. And yeah, have a great day all, and we'll see you all bright and breezy tomorrow. Thank you very much.
Thanks, Ryan. Thanks, everybody. Have a nice weekend already in advance. I shall talk to you on Monday.
Yeah, have a good one, mate.